Imagine a trap. Not a loud trap that snaps in 1 second, a quiet trap. You walk into it because it looks like the normal way. It closes years later when you are already inside. As an insurance broker in Germany for almost 30 years now, I look at this new reform of the public health insurance, the GKV Beitragsbemessungsgrenze, and I see exactly this kind of trap for many high-earning expats. Politicians say we stabilize contribution rates. We protect the system. Nobody has to be afraid. Politicians usually carry responsibility maybe for years until the next election. I carry responsibility for my clients for decades, 10, 20, sometimes 30 years of their life in Germany. In this video, I do not want to tell you what you must choose. I want to show you in a neutral way how this reform really works, with clear numbers, where I see a quiet trap for high-earning Indians and their families, and which questions you should ask before you decide between public GKV and private PKV health insurance. If you follow the news, you mostly hear one message. The contribution rate in GKV will be stabilized. We avoid big jumps in costs. For someone new in Germany, this sounds good. You think, oh, public health insurance is a standard, it is social, it is safe. I will just do what everybody does. Many Indian professionals also hear, private health insurance is risky. GKV is safe. Don't think too much. Choose not only or just choose GKV. For the next 4 years, this story works well politically. For the next 20 years of our life, it is incomplete. A good trap does not show its teeth at the entrance. It looks like a safe corridor. Later you will realize you have walked into a one-way street, and the exits are much smaller than you thought. Right now you are deciding your health insurance based on rules that are already passed, but which mainly take effect from 2027 and 2028. That is where we need to look closely. Let us start with high-earning employees. Many of you are exactly in this group. 2 key terms in German law. The Versicherungspflichtgrenze, the income limit above which you are allowed to choose private insurance as an employee. Or the Beitragsbemessungsgrenze, the maximum part of your income that it used to calculate GKV contributions. Anything above it is ignored for GKV. For 2026 the numbers are, the Versicherungspflichtgrenze are 77,400 euros a year. If you earn more than this, you can choose PKV. Beitragsbemessungsgrenze is 69,750 a year. Only income up to this selling is used for your GKV contribution. The 2027 reform adds a special step. The Beitragsbemessungsgrenze will be increased once by an additional 300 euros a month on top of the normal yearly adjustment for wage growth. That means 3,600 euros more a year of your income comes under the GKV calculation. If you earn around 80,000 euros a year today, at the moment only 69,750 euros of that is used for the calculation. After the reform, this selling moves upwards to around 67 euros year range, depending on final implementations. More of your salary becomes chargeable for GKV. Politicians can still say the percentage rate stays stable. In reality, the base under the percentage gets bigger and your monthly contribution goes up, especially if you are near the selling. Official examples for a typical employee with around 3,500 euros a month talk about rouge 380 euros more a year in a total burden. For someone close to the maximum, the increase is clearly much bigger. So, from a long-term advisory view, this is the first tooth of the trap. The mechanism, the percentage stays the same, we hope, but more of your your income is pulled into the mechanism years after year. The second tooth sits in family insurance. The Familienversicherung in German GKV. Until now, this has been one of GKV's strongest selling point. You pay as a main member, your spouse or life partner can often be insured for free if they have little or no income. From January 2028, this free spouse rule changes for many couples. The reform introduces a contribution surcharge for spouse insured via family insurance, a surcharge of 2.5% on the member's contribution base when your spouse or living partner is covered under the family insurance. In practical terms, for a member with an average income, this surcharge is expected to be usually about 100 euros a month. For a member paying the maximum GKV contribution at the selling, it can go over 140 euros a month or about 1,743 euros a year extra on top because the spouse is uninsured via GKV. So a benefit that was worth hundreds of thousands of euros a year over time quietly turns into a new regular cost position of more than 1,000 euros a year for many high-earning households. This is the second tooth of the trap. A strong reason to choose GKV, free family insurance, becomes a hidden bill that only starts in 2028, when many people are already looked into the system with partner and children. The third tooth is more subtle, but you will feel it in everyday's life. The reform also adjusts your co-payments for medication and other services, certain subsidies, for example for dental work, and parts of the benefits, what is paid easily and what is restricted. On paper, the message is still we keep the average GKV rate stable and makes the system more efficient. For you as a user, it can mean more money out of the pocket for certain treatments, more limits and rules before GKV pays, and less comfort than you imagined when you heard solid social insurance. This is not one big explosion. It is a series of technical steps that all push in one direction. A bit more costs, a bit less flexibility, especially for people who use the system more intensively. Together, the 3 T's, more income under the selling, spouse surcharge, and a higher co-payment, create a long-term pressure that simple headlines do not show. Now, let us connect this to your background as an Indian professional. In India, many of you know a different health cost logic. The population is much younger, more than half under 30 years. Often you pay the doctor or hospital directly. If you have private insurance, it reimburse your own and your family's costs. You see a clear connection. This is my treatment. This is my bill. This is my insurance paying for me and my family. In Germany, public insurance, GKV, the logic is more collective. Germany is aging. There are more long-term treatments, more chronic diseases, more expensive medicines. When total costs rise, GKV uses a pay-as-you-go system. Rising costs are spread across all contributors, with a larger share coming from people with the higher income. Several studies suggest that if nothing major changes, total social insurance contribution in Germany could move toward to 46% of income by around 2040. And experts calculate that today's GKV contribution rate would actually have to be almost 1/3 higher to fully cover the demographic future. Yeah, so as an Indian expat with a strong salary, you need to understand you are not only paying for your own health and for your children, you are also helping to carry the demographic weight of aging society, including people far outside your own family. From a social point of view, this is understandable. For a strategy point of view, there is a serious question. Do you want your main health health insurance strategy to be a system where your costs are driven by demographics and political decisions for the whole country? Or do you prefer to take more direct control for yourself and for your family in contract where you mainly pay for your own invoices and where your costs are more closely linked to your own health use and your own choices? In nearly 30 years of advising clients, I see that many Indians are happy to support a social system, but they also want transparency and control for their own family and long-term plans. My rule is not to say GKV is bad, PKV is good. My rule is to make sure you understand the difference between the logics before you simply say, okay, I will take GKV like everyone else. Let me be very clear. Politicians who pass this reform now will mainly be judged over next 4 years. Did they avoid big visible jumps in GKV contribution rates? Did they close the current financial gap of the system? Your life horizon is different. You may feel the Beitragsbemessungsgrenze will jump in 2027 every month as long as you earn above average. Feel the new boost surcharge from 2028. If your partner is insured with a family insurance, feel higher co-payment and more limits in your everyday health use and feel the demographic pressure in rising overall social contribution over 20 to 30 years. I have watched several reforms over 2 decades. Again and again, I see the same patterns. Short-term communication speaks about stability and no shock. Long-term reality is slow increase of burden, especially for younger, high-earning contributors. This is why I view this reform critically, not to scare you, but to protect you from walking into a long-term system with only short-term information. If you are an Indian professional in Germany, earning around above 77,400 euros a year, maybe married, maybe with children, and you feel that this reform might quietly turn your safe GKV choice into a long-term trap for you and your family, then here is a simple next step. Send me a message with the word GKV 2028. We will look together calmly and neutral where you stand today, income, family, visa, long-term plans, how the Beitragsbemessungsgrenze will change in 2027, the boost surcharge in 2028, and the demographic pressure affects your numbers. And which options you really have: staying in GKV, using expat-style PKV, or moving to a full PKV, always with the goal that you keep control over your health costs and your family strategy. My responsibility for you is not for years until the next election. My responsibility is the next 20 years of your life in Germany. And the real question is, will you decide your health insurance based on a short political story or based on a long-term strategy for you and the people you love? See you.